technology has gotten so cheap because of this rolling bear market that their relative PE multiple is back to where it was 10 years ago.
Tom Lee just issued a final warning to every Nvidia holder, and most people are going to miss it. He runs one of the best performing portfolios of 2025, and this week he said something that should stop every tech investor cold. A decade of AI gains. Gone. So is this the moment you sell, or the moment you've been waiting for? Stay with me, because the answer changes everything. Nvidia and the entire Magnificent Seven have been sold so aggressively that their valuations have reset to levels not seen in a decade. Tom Lee believes this is not a sign of structural collapse, it's a setup.
I want to talk about the fog of war in this macro section. And what I mean by that is the US is at war with Iran, and there's misinformation.
To understand why Lee is issuing this warning right now, you first need to understand the environment that created this opportunity. Fog of war. That's the phrase Lee used, and it explains exactly why so many investors are making the wrong move. When real geopolitical conflict is unfolding, misinformation moves faster than facts. Nobody knows the true cost of oil disruption, the duration of the conflict, or the real impact on global supply chains. So investors don't wait to find out. They sell first and ask questions later. That's exactly what happened to Nvidia. It didn't fall because the business broke. Revenue is still growing. Data center demand is still accelerating. It fell because the macro environment around it became impossible to price with any confidence. Uncertainty is the most corrosive force in markets. And right now, it's been priced aggressively into every tech stock on the board. But Lee's point is this: fog eventually clears. It always does. And whoever had the discipline to hold their position before that happens is the one who captures the full move.
Granny gained 24% compared to an 18% rise for the S&P 500, or outperformance of roughly 600 basis points.
Now, before you take any of this seriously, the first question you should be asking is, does Lee actually have the track record to back this call up? The answer in 2025 is yes. His granny shot strategy gained 24% in the early part of the year, while the S&P 500 gained 18%. 600 basis points of outperformance in a market that crushed most active managers, and since the war started, Granny is down only 2% against a 4% decline for the S&P. That is disciplined positioning working in real time, not luck. Lee has been ahead of this market in both directions, so when he says technology has reached historically cheap levels and that the conditions for a major reversal are forming, that is not a speculative take from someone talking their book. That is a high conviction call from someone with a verifiable track record in 2025, which makes the warning he issued this week land very differently than it would from anyone else.
According to prediction markets, the probability of oil being over $100 by June stands at 70%. While that might seem high to you, that's actually been declining.
But here's where it gets uncomfortable, because Lee's warning cuts both ways. Oil is the variable nobody can fully control, and right now, prediction markets are still pricing a 70% chance that oil breaches $100 per barrel by June. Think carefully about what that means for Nvidia specifically. Higher oil feeds higher inflation. Higher inflation means the Federal Reserve holds rates elevated for longer. Tight monetary policy is the enemy of high multiple growth stocks. And nothing on earth currently carries a higher multiple than Nvidia. So yes, the valuation looks cheap on paper. But if oil spikes and the conflict escalates instead of de-escalating, cheap can get a lot cheaper very fast. Nobody rings the bell at the bottom. Those are Lee's own words, and that uncertainty is precisely why institutional investors are sitting on the sidelines right now, unwilling to commit capital. This is the real risk, and it's the reason Lee's final warning is not simply bullish. There's a condition attached to it. Keep watching, because that condition is what the rest of this video is about.
It does look like markets are betting on at least a 50% chance of a ceasefire by the end of April. And actually, if we look at this over time, those odds have been rising, and actually 53% is probably the highest odds since early March.
And that condition is starting to be met. The probability of a ceasefire by the end of April just reached 53%, or the highest reading since early March. At the same time, the probability of oil breaching $100 has been quietly declining from over 90% in Early March, down towards 70% today. Both numbers are moving in the same direction, away from maximum fear. Markets don't need certainty to stage a powerful rally. They only need less uncertainty than the day before. And right now, the macro forces that have been systematically crushing Nvidia are slowly beginning to ease. That shift doesn't feel dramatic while it's happening. It never does. But this is exactly the kind of early signal that separates the investors who are positioned before the move from the ones who are watching after it. We're still early, but the window is narrowing. Here's what the Nvidia valuation actually looks like right now.
Technology has gotten so cheap because of this rolling bear market that their relative PE multiple is back to where it was 10 years ago. So you've now wiped out an entire decade of gains associated with AI and consistent growth.
This is the center of Lee's warning, and the number is genuinely shocking. The entire AI premium has been erased. Every multiple expansion that came with ChatGPT, the data center build-out, the global belief that Nvidia would define the next era of computing, completely gone. The relative price to earnings multiple for technology is now sitting where it was a decade ago. The market is pricing technology as if AI never happened, as if the last 10 years of consistent earnings, growth and structural dominance meant nothing. Now, you can debate whether AI valuations got ahead of themselves at the peak. That's a fair conversation, but you cannot seriously argue that Nvidia's underlying business has collapsed. Revenue is still growing. Data center demand is not slowing. The gap between what Nvidia is actually earning and what the market is currently pricing it at is historically wide. That is the core of Lee's warning, not a sell signal, the opposite. If you miss this window, you may not see these prices again. But the valuation reset alone is only part of the story, because something in the market's positioning makes the timing even more urgent. Citadel's Scott Rubner.
Conditions are high for a rally because there's just a lot of people short stocks right now.
Citadel's Scott Rubner, one of the sharpest tactical voices on Wall Street, flagged something that makes this even more pressing. Short interest in equities is currently at extreme levels, and retail investors, measured by single stock activity, are at their lowest participation since the fall of 2024. That combination, maximum short positioning paired with exhausted retail, is historically the exact precondition for the most violent and fastest moving upside reversals in markets. When sentiment is this negative and positioning this lopsided, it doesn't take a major catalyst to spark a move. A single, credible ceasefire headline, an oil price that fails to hold, a softer than expected inflation print, any one of those triggers could cause a rapid short covering event that sends Nvidia surging faster than most investors have time to react. The fuel is already loaded, which brings us to the last signal scheme. The one Lee mentioned almost in passing, but that changes the entire read on where this market is heading.
Crypto has been outperforming since the war started, while gold has actually underperformed. So as a wartime store value, crypto looks a lot stronger.
This is the last signal. Since the war began, crypto has been outperforming gold. That tells you risk appetite hasn't died. It's rotated. And when oil falls and the macro pressure eases, that capital doesn't stay in crypto. It moves directly into tech, into Nvidia, fast and aggressively. Historically cheap valuations, extreme short positioning, a rotation already underway. The setup is real. Tom Lee's final warning was never a sell signal. The warning is simpler. The window between historically cheap and fully repriced is shorter than you think. The fog is already clearing. Waiting for certainty will cost you the entire move.